Welcome to the Capital Exchange. I'm Steve Wilbur, Managing Director at Allen Capital Group.
And I'm Travis Portwood, Chief Investment Officer with Allen Capital Group.
Travis, Wednesday was Fed Day, which is the day the Federal Reserve announces what they're going to do with interest rates, particularly the federal funds target rate. The announcement had all of Wall Street's attention, but to no one's surprise, they announced a 0.5% increase, which was communicated. Really, everybody expected it.
Yeah, it's true, Steve. They didn't surprise anyone with a 0.5% hike. The surprise came in the comments following the announcement. Beyond the 0.5% hike, traders had been predicting that at the June meeting, the next FOMC meeting, the Fed was going to hike another 0.75 point, or 0.75%. However, Chairman Powell put that idea to rest, at least temporarily, saying the Fed wasn't considering larger interest rate hikes in the coming months.
Yeah, Travis, and the markets loved that, didn't they? The S&P 500, the Dow Jones Industrial Average, and the NASDAQ all rallied about 3% on the news, which is fantastic.
It is fantastic, Steve, but what a difference a day can make. So markets despise uncertainty, and taking steeper rate hikes off the table relieves some of that uncertainty. It also relieves some of the uncertainty in bonds, as the 10-year Treasury yield dipped slightly to around 2.91% on the news. Previously, it had been trading around 2.96. So that also pushed bond prices higher, and it's been a rough year for bonds, like we pointed out in last week's video.
Yeah, Travis, it was a good day, and we love those types of rallies. I feel it's important, though, to point out we are not out of the woods yet. Inflation remains an issue the Fed is going to have to battle for some time, and we still have the war in Ukraine that could cause numerous surprises and actually contributes to inflation as well. We still have supply chain issues. Multiple sectors are contributing to inflation there. So there's a lot of variables out there, and a lot of things could go right, but a lot of things can go wrong also.
Yeah, that's true, Steve. And it seems the market ignored those on Wednesday, and then on Thursday remembered them again and whipsawed the other way. And it just shows that the environment can change very quickly in today's world. Yeah. We'll take the small wins when we can get them, and then endure the pain when we have to. However, the fact remains that the Fed has a narrow path to orchestrate a soft landing here, and that would be raising rates gradually, getting inflation to a reasonable level while maintaining full employment, all without tipping the economy into recession. Or they could make a policy error, which historically the Fed has done, right? Hiking rates until something breaks and inducing a recession. At last week's Berkshire Hathaway meeting, Warren Buffett called Jerome Powell a hero for how he handled the pandemic and the COVID crisis. But investors have short memories, and if the Fed ends up pushing us into recession, Powell will quickly move from hero to villain. So stay tuned.
Isn't that true, Travis? This has been great. I look forward to it next week.
I look forward to it as well.
Thank you for watching this week's Exchange.
To make sure you don't miss out on future discussions, please follow us on social media.
Make sure to like and share our videos, and we'll see you next week.